Good morning. Welcome to CATEX-TV. My name is Frank Fortunato. This is a live broadcast from Princeton, New Jersey. Today is Tuesday, February 24th, 2009. It's 11:30 a.m. Eastern Standard Time in the U.S., 4:30 p.m. in London, 12:30 p.m. in Bermuda, and 9:30 a.m. in Mexico City. If you need to reach us during the broadcast, you can phone in toll-free at 1-866-67-CATEX. Overseas, our AOL instant mail address is CATEX-TV. Tomorrow at 9:30 a.m., a press release on global distribution circuits is being sent out from CATEX, our holding company that owns the station. It's going to be announcing the release of PivotPoint 2.0.net, which is a completely .net compliant, web-based rebuild of the PivotPoint transaction system for insurance and reinsurance. That press release will be posted on our website tomorrow at 9:30 a.m., or it'll be available at any news outlet that you currently use. We will be discussing the system in some detail tomorrow. And now to our main news. It's the Britney Spears song, "Oops, I Did It Again." It's happening. All eyes are on American International Group. AIG is apparently set to unveil the largest quarterly loss in U.S. corporate history. It's thought that it could see it once again teetering on the edge of bankruptcy. AIG is apparently in talks with the U.S. government right now to seek another revamp of its rescue package. This will be the third such revamp since the government stepped in last September. Reports are indicating that AIG is going to suffer a fourth quarter loss in the neighborhood of about $60 billion. This will be more than double AIG's third quarter loss of $24.5 billion. Apparently, this is the result of the weight of another round of heavy write-downs on a variety of assets, including commercial mortgages and private equity investments. According to CNBC, which is the business news network in the U.S., AIG's board is meeting in hopes of hammering out an agreement with the government. However, in case the agreement does not come to pass, AIG's lawyers at Weil, Gotshal & Manges are preparing for the possibility of bankruptcy. Without additional capital, such a loss of this magnitude, $60 billion, would likely trigger further downgrades in AIG's insurance and credit ratings. This would force AIG in the normal course to put up additional collateral. According to CNBC, it doesn't have it. The Treasury and the Federal Reserve have already provided over $150 billion in assistance to AIG, in an agreement that saw AIG ceding about 80% of its stock in return for federal aid. A spokesman for the New York Insurance Department said that they would not comment on press reports. The spokesman said that as far as he knew, the department had not been informed of a possible $60 billion loss, and even if it had, quote, it would be inappropriate to comment before any official announcement. The CNBC story said the talks between the government and AIG are focused on how the company can swap some of the debt held by the government for equity in AIG. MetLife is in the news, and so is AXA, bidding on Alico, the American life insurance company, which is a pretty profitable part of the AIG chunk. MetLife and AXA apparently are interested in trying to obtain it. MetLife has made a preliminary offer, according to Bloomberg, of $11.2 billion for the unit, although Bloomberg says the price may drop to $8 billion because of a deterioration in the unit's financial condition. Neither AIG nor MetLife or AXA could be reached immediately for comment. Some other news, the broker Marsh Mac has created a property insurance program for oil and gas companies in the Gulf of Mexico in conjunction with Warren Buffett's Berkshire Hathaway Group. The facility will provide up to $500 million of annual capacity for energy companies in the aggregate for windstorm losses incurred in any given policy year. The Cost and Coverage Certainty Program, known as the CCC facility, is designed to provide pricing stability on a pooled basis for a period of 5 years. It's underwritten by members of the Berkshire Hathaway Group, and the program is currently available only through Marsh. Participants will be offered limits of $100 million or $50 million per occurrence, with a range of attachment points from $20 million to $250 million. Marsh's reinsurance subsidiary, Guy Carpenter, is in the news today. A gentleman by the name of David Flandreau, who's a member of Guy Carpenter's Global Business Intelligence Unit, told a conference in London today that he did not think Allstate would be the next insurer to go presumably into bankruptcy, despite recording a heavy erosion of capital amid massive investment losses at the end of the year. Mr. Flandreau said, quote, despite the fact that Allstate lost 45% of its capital at June 30th, 2008, at the end of the year, Allstate does not have the exposure from credit derivatives that AIG did. He went on to say, if anything, this is more of a pure vanilla loss compared to what happened at AIG. However, Allstate's path toward full security may be less solid than some of its competitors, Mr. Flandreau said. He went on to say that the company will have a tougher time with a smaller capital base. Earlier this year, Allstate recorded a fourth quarter loss of $1.1 billion, which sent the full-year loss spiraling down to $1.67 billion. This is down from a gain of about $5 billion last year. Flandreau said that he did not see any of the major European and U.S. reinsurers defaulting on their claims and needing to go into runoff, although he did say that a slew of Midwestern regional reinsurers and smaller European insurers may well go into runoff. It's a crystal ball from Mr. Flandreau. Very interesting. Maybe if we could get predictions on this, we could really benefit from it. There was another big earthquake today. This is out in the Pacific, a 6.1 in the Marianas Islands. You see the orange square here. It's to the east of Guam. It's about 104 miles south-southeast of Saipan. There were no immediate reports of any injuries or damage, nor were there any tsunami alerts that were put out. The stock market is up about 83 points now. We'll go to a word from our sponsors. In 9 hours and 21 minutes, the 44th President of the United States, Barack Obama, will step up to the well of the House of Representatives and deliver his first speech to a joint session of Congress. The U.S. Senate and the U.S. House of Representatives will be present in front of him. He's going to talk about the economy